jump into Twitter today on the trade, and this one comes from Cyclops Trader. He says, people say ignore the noise, but as a day trader, the noise is the money. Well, let's see whether our guest on the show today agrees with that one. We're going to check in with Peter McGuire from XM. I'm hoping we're going to chat some FX. Peter, thanks so much for joining me this afternoon. Do you agree with Cyclops Trader? Are you a day trader? Are you looking for that noise?
I'm day trader, Kara. I'm an hour trader, minute trader, like yourself. Now, that's the pedigree. I tell you, you look at these markets and I think there's always opportunities, and depending, I'm not one to marry trades. You've got to look at what's the fundamentals are. You've got to look at your technicals, the seasonality, and all of those components that rolled in together create a storyline and an opportunity. And the beauty of the markets is you can go up or down, and that's not a bad way to trade, is it?
Well, given you're an hourly trader then, are you liking some of that volatility that has come back to those FX markets at the moment?
Been one hell of a month. Been one of the best months ever. We've seen that US dollar come under continued, push down. We've seen a big push up as far as pound, very, very strong yen, and of course the euro. Look at the Aussie, look at the Kiwi. If you haven't made a dollar in the last 3 weeks, give the game away. Look what happened as far as gold. Gold's up 107, 108 bucks since the start of the month. It has really been an outstanding month to date, and I think that there's even a better time in the next 8 days than what we've seen in the last 8 days. Kara?
All right, so where are you looking for that volatility then? Pick us a pair. Pick me your top pair when you come into trading over the next 8 days.
I think it's going to be the pound. I think there's further upside there. I don't know whether we'll break through that 35-month high of 142 odd, but I think that continued push up. 33 million received one dose of the vaccination. That seems to be the storyline. 10 million, this is UK, of course, 10 million have received the second dose. So from a good news story, we've got numbers coming out tomorrow, the PMIs, all of that, I think, will build momentum on the pound. And I just think that it's not a bad place to be over the next matter of days. Continued softness, US dollar, pound up.
The euro sterling cross, bit of volatility there, you think, given that divergence that we are seeing now between those two economies?
Yeah, very much so. I think that there's even, again, a little bit further push to the upside on that one also. So look, there is that many different crosses out there and opportunities, you name it, you can trade it. And when traders, and that's why I said earlier, an hour, many traders trade for very, very short periods of time, as we know, and some trade, they're looking at 10-minute charts, 3-minute charts. You can set up your platform to really do whatever that you think is reasonable. And I think that's one of the great attractions, and it's a 24-hour-a-day market. It doesn't shut at 4 o'clock in Sydney. It keeps on going, and it actually gains momentum at 4 o'clock in Sydney because Europe starts to come online, India and so on, and then it rolls across to Europe, and then we know, Big Brother takes over as far as US markets around 10 or 11 o'clock at night. So it's a captivating market to be a participant of, Kara.
All right, so trading 24 hours a day when it comes to FX, you're an hourly trader. So at what point do you sit down at your computer, you look at your trading screens? How do you manage your time? Do you allocate specific times of day, or you just have you got your phone there looking for a bit of a pop in a move? Where are you looking? And there it is, there's the phone.
There's the phone. So if you're a trader, you've got to be across those things. I mean, a lot of people are iPad. They've got an iPad there. They've got screens on their desk. It's where they set themselves up from if they're at home. I've got many traders that are sitting on stationary push bikes, getting exercise while they're watching 8 different markets. They've got TV on. They've got information coming through as far as, huge amounts of fundamental analysis coming through. They're looking at their technicals and they're setting themselves up. So they're locking in their stops. They're seeking, they think that there's a breakout here or that trend is going to continue. And really, if one looked at the start of this month as a great example, 3 weeks ago, we were right at the start of Easter, and the US dollar has just capitulated. Markets have been strong, gold up, as we mentioned, and it's just been an extraordinary time for FX traders, Kara.
Are you a set and forget guy, Pete? Do you put your trades on, put your stops limits in, and then walk away, forget about the trade, know that you've got those positions in there, you've got your hedge, your risk hedge with those stops in, or are you constantly looking?
depends on how many markets you're trading at once. If you're trading, 5, 6, 7, 8, 10, then yeah, you've got to be pretty much across it, because you're really you're turning yourself nearly into a dealer, because you're sitting there and you're engaged in the whole process. But if you're only trading one or two markets or one market, I know many traders, and they run successful businesses externally. They could be a doctor, a dentist, they could be working in the sense of horticulturist, surveyors, you name it. People do this all around the world, Uber drivers, anything, mothers, and it just depends on their risk tolerance and what they've got on their horizon at the moment. So, as you know, Kara, you've been in the game many, many years. People change daily on their viewpoints, that they see opportunity and they go, right, I'm going to stack in here. I'm going to lock in, 4 or 5 different markets because I see an opportunity and I'm going to take that, versus other days that it's quiet. And, and one of the other things, Kara, I think is very important. There's got to be a holiday. There's got to be a point in time that you say the markets are dead, I'm not getting involved, and I'm just going to sit on that, sit down and relax and let your brain take a bit of a rest, because it does require a fair bit of, intellectual capacity to keep abreast of everything.
Recomposing yourself is definitely important. And I guess that leads hand in hand with my next question is, how do you get over disappointment if you miss a trade, or if you pick it the wrong way? How do you kind of recover from that and come back and jump back into the market? What's your strategy?
That's one word. That word is resilience. So you need to be resilient. I'm a huge believer in exercise. I'm a huge believer in good nutrition, cortisol levels, checking testosterone levels, having blood tests, I think oxygen uptake, all of those things to be positive of mind. Because if you get into downward spirals, and I've seen traders do it all of a sudden, they drink alcohol and trade, or they do whatever and trade, or they have, copious amounts of coffee. Their cortisol levels are sky high. They're not sleeping. They're making irrational judgments. So in turn, you're very much the master of your own destiny. There's not necessarily a sounding block to say, am I making the right decision? So you've got to be your own mentor, and that's difficult in a lot of ways. So I think that just the most important thing is adequate rest. Don't worry about what happened. You can't change from a mental standpoint. You cannot change the past. They tell me you can go into the future, but I'm not sure. I haven't been able to as yet. So I can't worry too much about what's happening in the future. I've got to worry about what's happening now and forget about what could have been, worry about what can be. And that's where the resilience and that mindset comes into it, Kara.
All right, I'm going to go back to one of the crosses as a final question, because the Kiwi dollar was in one of your notes today. Of course, it has jumped on the back of that decision from the Bank of Canada, some commodities play out there, Australian dollar, Kiwi dollar, CAD, all benefiting from that decision. It's just sitting below the 72 mark at the moment. Do you see further upside? We've spoken to a couple of analysts today that have said that the RBNZ will actually be the next bank that moves now that Canada has taken the plunge.
Yeah, well, I think that there's further upside for it. I wouldn't be surprised to be a 72.5 in the short term. But again, what the time horizon is, if we're talking, out to July or August or September, I'm only worried about what's happening by the end of the month, because I think that continues softness as far as US dollar will be a little bit into the 90 handle. I wouldn't be surprised. It's about 91.1 at the moment. So I think that further softness US dollar and a little bit further upside as far as New Zealand dollar. And if it's in a trend, then that's your friend, and take advantage of it, and watch those markets closely, because I think that yes, there's further upside, and there's the rest of this month. There's a good month. All
right, Pete. Resilience, that's the takeout from this, and the trend is your friend as well. As always, it's so great to chat with you on the trade. I'm sure we will catch up soon.
Take care, Kara. Lovely to join you. Bye.